Hi there, it's Grant here, and in this video what I'm going to do is I'm going to show you how to open and close an options trade. Also, before I begin, this video is really for beginner options traders who've never traded options before but they're interested in doing so. If you're fairly experienced at options trading and you've opened options trades before, then this video is not going to have any value for you. So with that out of the way, let's get on with the video. So if you've never placed an options trade before, it can be incredibly intimidating. I know when I placed my first options trade, I was actually really nervous, no idea what I was doing. Luckily, I was following someone who's really good and getting their recommendations, so that sort of helped. But yeah, if you're going to place your first options trade, it can be quite intimidating because you don't really know what you're doing. And you only, in my opinion, you only ever learn by doing things. And the more you obviously trade, whether it's options or crypto, whatever, the more confident you will get. Also, before I get into the video, I'm using Tastyworks to do all of my options trades. In my humble opinion, this is just my opinion, of course, Tastyworks is the best options trading platform out there. Tastyworks is built by options traders for options traders. It's built specifically for options trading. I really enjoy it. The good thing about Tastyworks, it's great for people who are in the US, but more importantly, people outside the US can use it as well, specifically Europe. So it's a great platform. Very easy to use in terms of functionality, costs you nothing to set up a Tastyworks account, transfer your money and off you go. So with that out of the way, let's show you how to place an options trade. Okay, so the first thing I'm going to do is I'm going to open an options trade for you. I'm not actually going to open it, but I'm just going to show you the process. Now, before you open an options trade, you've got to pick a stock to move. In fact, what I'm going to do is just going to recap what an options is. So an options contract is basically an online contract or a derivative that gives you the right but not the obligation to buy or sell a stock at a set price by a specific date. That is an options contract in a nutshell, and you've got two options you can basically, you've got two different options contracts that you can trade. You can trade call options and you can trade put options. You can buy a call option, you can sell a call option. You can also buy a put option and you can sell a call option. Why would you buy a call option? Well, you buy a call option if you think a stock is going to go up above a certain price by a certain date. In that case, you'd open a call option on it. And why would you buy a put option? Well, you buy a put option if you think a stock's price is going to fall below a certain price by a set date. Other thing you need to know is that for every options contract that you buy and take out, whether it's a call or put, that contract will control 100 shares. And I'll show you how much it, the pricing as we open this trade. And the other thing you need to know is when you buy an options contract, whether you sell it, when you buy an options contract, whether it's call or put, you will be paying a premium. And I'll show you that in a minute. The premium is the price that you have to pay in order to buy an options contract. But if you sell an options contract, you will collect premium. And with an options contract, there's always going to be a buyer and a seller. So with that out of the way, let's open an options trade. Now, the next thing you need to do is you need to pick a stock in order to trade. And the best stocks to trade options with are ones that have volatility. A stock that's very flat and the price that doesn't really fluctuate much. Whilst you can make money with options that way, it is difficult. You need volatility when trading options. But the real skill with options trading is knowing when an options price is going to move in whichever direction, whether it's going to go up or whether it's going to go down. And that is why you need a solid option strategy to follow. Now, you don't want to have any emotion involved when options trading because that's when you're going to make mistakes. You want to have a clear strategy and process in place that tells you exactly when to get in and when to get out of an options trade. Now, I'm not going to go into strategy because it's out of the scope of this video. That's for a whole new video, which I'll do down the line. Today, I'm just going to show you how to open and exit an options trade. It's actually quite simple when you know what you're doing. Also, there's loads of different other options trading platforms out there, such as Robinhood, Webull, and a ton of others. But I highly recommend Tastyworks. What I'll do is I'll leave a link to Tastyworks down in the description. I don't get a commission for it, but I just highly recommend it. Anyway, enough waffle. Hopefully that's helped, and let's get on. So in this hypothetical, sorry, I need to put my teeth in this hypothetical example of opening an options trade, I'm going to select Google here as our stock we're going to trade with in options. Now, when you open, if you're using Tastyworks, for example, but all of the others are going to be very, very similar to this. When you pick a stock, what you're going to see is this is something called the options trade. This is all of the different. So on the left here, this is the strike price. The strike price is a set price in the contract when the option will expire. Sorry, strike price. This is the expiry date. Sorry, ignore it. So these are all the different expiry dates when the option will expire. Down the middle is the strike price. So let's, for example, we want to trade Google and open an options position for March 17th options. So when we open up, so this is the expiry date of the option, whether we take out a call or put. And down the middle are all the different strike prices. Now, the strike price, just to recap, is the set price in the contract that you can buy that stock at if you choose to do so before the option expires. But one thing I will let you know, the majority of options traders, when they take out an options contract, never buy the stock that they're controlling with the options contract. The main goals an options trader generally when trading options is to basically collect premium, and these numbers here down these columns are the premiums. So basically, when you buy an option, you have to pay a premium. When you sell an option, you collect a premium. So hopefully that makes sense. So what we're going to do in this hypothetical example is what's Google trading for? So Google is currently trading for about $100. We're going to take out a call option. We're going to take out a call option here because I think that let's try and go down here. 1 second. Look. Yeah, so basically, I think the price of Google is going to go up. So what I'm going to do is I'm going to take out, I think, hypothetically speaking, the price of Google is going to go above $110 by March 17th. And basically, these are all of the call options, and these are all of the puts. If you want to buy a call option, you have to click under ask. If you want to sell a call option, you will click on bid, whether it's for calls or puts. Also, if you're trading options for the first time, my advice is to just focus on buying calls and buying puts in the beginning, because this is the most simple and risk-averse way of trading options in the beginning, because the most you can never lose is the price you pay to open an option. Okay, so let's do this. So what I'm going to do is I'm going to buy the March 17th call options. I'm going to buy to open with a strike price of 110, because I think Google is going to rise above 110 by March 17th. So what I need to do if I want to buy a call option, just go to calls, click on the ask, and this is the premium I'm going to pay for one share. So I'm going to click on that, and the order will pop up. So remember that obviously we're going to be paying 183 here. Got to multiply that by 100 because each options contract controls 100 shares. So basically I want to have a limit order type, need to check. So it's the March 17th expiry. Strike is 110. It's a call. Buying to open. We're going to be paying 183 a share premium. So we're going to be paying $183 to open this. And all you do is click review and send. Now I'm not going to place this. And you just sort of go through, you just sort of look through your order here, and then you just click send an order, and then Tastyworks will place the order for you. And that is, I'm going to clear it. That is all you have to do in order to open an options trade. And it would be exactly the same if you want to open a put. If you want to say for example, with a put, Google's trading for 100 at the moment. Say if, I don't know, we expect it to fall to 97. We want to buy a put to open because we think Google's going to fall to 97. You just click on this, and it's exactly the same process. So it's March 17th expiry. We're opening, you're having one contract, 97 strike. It's a put, and we're buying to open the position. 325 is the premium, so it'd be $325. Also, you can open. We're only buying one contract, but you could buy multiple contracts. Now, I wouldn't buy multiple contracts in the beginning, because it's just going to increase your risk. Once you've scaled your account, then you can take more risk by buying multiple contracts. But in the beginning, just take out one contract at a time. So that is how you open an options trade. Very, very simple. Now, I'm going to show you how to close an options trade. So I've got one position on at the moment that's open. It's on Apple stock. And as you can see here, so this is the trade I opened. I've actually got the March 17th call option with a strike of 125. So it's, I'm just waiting for I'm betting that the price of Apple is going to fall by March 17th, which I think it will do. So I'm not stressing at the moment. But if I want to close this position and count my losses or take a profit, you just hover over it, right click, and you can adjust how much profit you take out of a trade. So you just go up here. If you want to take 100% of a profit, just do that, click the button, and basically you'll go through the process of review and send. When you execute it, Tastyworks will close the position for you, and then it will basically send you the premium that you are due. Obviously, if you're in the profit, you'll receive more premium than you paid, so you've made a profit. But obviously, if you're in a losing trade, you will receive less premium than what you pay because you haven't met the strike price. So that is it, guys. That is how you open and close an options trade. Nothing to it. So yeah. So I hope if you found this video useful, please like this video because it helps with the algorithm and it helps the video to reach more people. And if you want more videos like this, why not subscribe to the channel? Now, this is only opening and closing options trades, just a very small part of options trading. If you've never traded options before, like I said, the real skill is picking the right stocks that have volatility, and having a strategy in place so you know when to get in and out of an options trade. That's why I highly recommend that you follow an options trading expert. And in my opinion, Larry Benedict is one of the best options trading experts in the world. He's got an options trading advisory service called One Ticker Trader, where he teaches you his options trading strategy called One Ticker Trader. It's One Ticker Retirement Plan. Very simple to follow, but highly effective. And through the One Ticker Retirement Plan, he's on a 12 trade winning run that's returned 240% ROI overall of his trade. So I highly recommend this service. So if you want to join that, I'll put a link down below in the description. It's just $19 to join for the year, and you get a 60-day money back guarantee. So I highly recommend that. Anyway, that is all I've got for you. I hope you found the video useful and informative, and I'll speak to you soon.